Welcome to Black Belt Selling with Stephanie and Anna Scheller. I'm Anna.
And I'm Stephanie.
We're a mother-daughter team who are passionate about helping you grow your business so that you can live the life of your dreams. And growing business and selling business and doing all kinds of fun things with business is the topic for today, because we have with us a special guest, David Barnett. David out of Ontario? No, Toronto.
No, I'm on the east coast of Canada, so I'm in New Brunswick, just east of Maine.
New Brunswick.
Ooh.
Yeah.
Like that's a time zone we probably don't even have in the United States, isn't it?
You're right. It's Atlantic time, but I think the U.S. Virgin Islands might be in Atlantic time.
Well,
so I'm an hour later than Eastern.
Oh my! Wow! Whoa. Well, David today is going to be shedding light on the complex and sometimes tricky process of buying, selling, and managing small businesses. So we're going to have some engaging stories, thoughtful comments, and some interesting ideas. So I'm particularly interested as a business owner, and even if you're not a business owner, but you're a salesperson, we were talking about this just before we started. You are halfway there. And so you really want to listen to what David has to say. So David, welcome to Black Belt Selling.
Well, thanks. It's great to be here, ladies. So where do we start? What do you want to know first?
How'd you get started?
Okay.
Yeah, people want to know.
So I'm a lifelong entrepreneur. Ever since I've been a teenager, I've been buying and selling things, or up here in Canada, when I was 14 years old, I bought my first snowblower. I don't even know if you know what that is. It's a machine that shoots snow. And so we use it to clean our driveways. And of course, there's always, someone on the street who doesn't want to do it themselves. And they look for that teenager with a snowblower who can come and do it for them, right? And so I've always been involved in business. And I had a career out of university, and then I started a business. And it didn't really suit me that well. I wasn't that happy running the business. And I had a partner, and he wasn't really happy in it either. So we decided we would sell it. So we sold the business completely naively, not knowing how to buy or sell businesses. And that was my first experience selling a business. And then I started another business, which was a commercial debt brokerage. So I used to arrange commercial mortgages, operating leases, factoring facilities, which is the sale of accounts receivable. I used to do all kinds of financing activity for small businesses that were looking to grow or change their financing. And when the financial crisis came in 2008, 2009, about half of the different sources of financing that I had went out of business when, that big Wall Street collapse happened. So my business basically shriveled up and went away almost in the matter of months. And I started looking around for an opportunity. And one of the things that I kept noticing when I was doing finance brokerage was that seemed to be a real lack of expertise in the field of business brokerage where I live. I'll tell you one quick story. I got a call from a banker, on Main Street, who called me up, and she said, "Dave, I've got this lovely couple. They've just moved to the country. They need your help. They have a contract here to buy a convenience store. And it's written up on a home purchase contract, and it says that they're going to get 95% financing in 10 days, which is the kind of terms you would expect buying a home. And what had happened was some store owner had decided to sell his business using a real estate agent who had no idea how to sell a business. And this Korean couple came along, and they wanted to buy the business, and so the real estate agent just took the contract out of her briefcase that she uses every day, and she filled it in and just put in that it was a store, and sent them to the bank for financing. Of course, businesses aren't sold under those kinds of terms. You can't get that kind of financing at the bank for a store. And so I realized that there was definitely a need for that kind of expertise. And so I joined one of the big franchise brands of business brokerage, actually a company that's headquartered in the southern US called Sunbelt. And the reason I chose to go with them is that they have over 300 offices around the world, and they gave me access to training so I could actually become certified in the field of business buying and selling, a business intermediary. And it took me about 2.5 years, 3 different trips to get my training, to get my certification in that. And I became the first person with that designation here in my local market. And so I became a business broker. And over 3 years, I sold 36 different companies for other people until I finally had to leave that industry. And the reason why I left the industry is because, well, business brokerage is an awful business to be in. Because the cash flow is a roller coaster. So like real estate, business owners would list their business with me to sell, and I would then go about trying to find a buyer, and it takes a lot of effort and energy and time to sell a business. One of my first listings was a fried chicken franchise, and I listed it at the end of 2008, and I sold it at the end of 2011. I worked on that file for 3 years.
Wow.
And the seller wrote me a big, high 5-figure check was my commission on that deal, because it was over $1 million business at the end of the day. And he said, wow, he said, look at you. You just earned this huge amount of money. And I looked at him and I said, his name was Tony. I said, Tony, the kid who works at the front of your restaurant asking people if they want fries has earned more money in this time than I have. Mm-hmm. Right? And I've worked for 4 years almost on this deal without ever knowing if this check was ever going to show up. And in my 3.5 years as a business broker, I went through a couple of droughts of 9-10 months with no deals closing. And meanwhile, I was the office owner, so I had all that overhead. So it was, if you ever see my photo, I've got gray hair on the side of my head. That all comes from business brokerage, that gray hair. And I finally, at the end of the day, I had to leave because I couldn't sit down and make myself a business budget or a household budget where I could plan from 1 month to the next, where I was going to get, the certain amount of money and how I was going to spend it. And I said, I can't raise kids this way. I have 2 small children. So in 2011, I learned that my marriage was going to be ending, and I had a big drought in business revenue. And going into the fall, I had 6 deals that were going to close. And there was going to be almost $250,000 in commissions coming in the last 3 months of 2011. And by the time the year ended, those 6 deals had become 3. And 1 deal fell apart because a bank rescinded a funding letter. Another deal fell apart because a franchisor was a real jerk to a buyer, and the buyer didn't want to do business with that company. And the last deal fell apart because it was in a regulated industry, and the government agency that oversaw that industry wouldn't issue a license to the buyer. So I had done all this work on these deals, and the buyer wanted to buy and the seller wanted to sell, and I wanted the deal to close. But somehow someone else ended up tipping over my apple cart. And I said, how can I be in a business where it's so easy for outside influences to wreck my deals, right? And so that $250,000 shrank to about $100,000. The money came in the door. I paid off my credit cards and lines of credit and my debts, and I said, I'm done. And I basically sold the brokerage to an associate, and I left. And the worst thing that can ever happen to an entrepreneur, ladies, is what happened to me. I went and I found a job.
Yeah.
So I started, and this would have been 2012. I started a new career. And after a couple of months, I was doing business to business sales, and I was out on the road, and my cell phone rang, and it was a person who said, hey, I'm thinking about selling my business, and someone gave me your name. And I said, well, I used to do that, but I'm not a business broker anymore, so I can't really help you. And I gave him the name of my old associate. I said, maybe that guy can give you a hand. And then a week later, a different person called me, and they had been referred to me by another different person. And they said, hey, I'm looking at buying a business, and I've spoken to my accountant, and I've spoken to my lawyer, and they've given me, some advice, but they don't really seem to be able to sit down with me and go through all this information and decipher all the stuff that's going on and help guide me on what I'm supposed to be doing next. I really need someone who can help me negotiate and interpret this stuff and have an idea of what to do next. And then I paused because I thought, wait a minute here, there's something in this. And I said, I have a full-time job. I used to be a business broker. I certainly can help you. I have the experience and training to know how to do this stuff. And I said, I can help you, but I'll have to act like a consultant. And I can only meet you on evenings or weekends, and I'll have to charge you $100 an hour. And then I just shut up and I waited. And I started counting the seconds in my head. And after about 5 or 6 seconds of silence, the guy said, "Oh, well, then you can meet me Saturday at 9." And I said, "Yeah, I can meet you Saturday at 9." And that was the beginning of what I do today. And so now I am a consultant that helps people buy and sell businesses. And I have a menu of services for both buyers and sellers. And I'm much more like an accountant or a lawyer in that I simply charge my clients for what I do. So when I'm working with a seller, I'll do an evaluation and charge them a certain fee, and then I'll do a packaging so they're prepared to meet a buyer and have all the information together, and I'll charge a fee for that. And my sellers like it because they don't end up paying me a big commission. And my buyers like it because I'm no longer in a conflicted position. You know, a lot of brokers, they're getting paid by the seller when the business sells. So when a buyer comes along and they're looking for objective advice on the deal, the broker, their interest is in having them buy the business, whether or not it might be the best fit.
Yeah.
And when I work with my buyers, they're paying me either for an analysis or just by the hour for coaching or consultation. And I don't have any problem at all telling them the deal is bad, right? Because I want them to save their money because I want them to hire me next time they go looking at a business. And if the deal is good, I'll tell them that because then there's more work involved for me leading up right into the sale. So my interest is aligned with my clients all the time now. And they end up paying me less, and I end up avoiding that crazy roller coaster cash flow because every week I send invoices to people. So it works better for me, it works better for my clients. And now instead of just working with people here locally, I work with people all around the world. USA, Canada, UK, Australia, New Zealand.
Wow. So I'm curious to know, since you're in the business of helping people buy and sell, what is the biggest mistake? And since we're talking a lot about buying businesses today, since, and just to clarify for our listeners, we've all heard the news at this point, working a job is not going to get you to financial freedom. It's not going to get you where you want to go. It comes down to having a business that you own, not just run and work in. And so that's a lot of why we're talking about, buying businesses. So, I'm curious, what's the biggest mistake you see people try and make when they go to buy a business, or biggest piece of advice you could give someone who's thinking about buying a business?
Yeah, well, there's a lot of them, and I keep seeing people make the same mistakes over and over again. One of the books I've written is actually called 21 Stupid Things People Do When Trying to Buy a Business. It's on Amazon, and it's always the same things. And so here's a couple of the big ones. Not considering the value of your investment or not considering the value of your time. So people will look at a business and they'll say, oh, this business has a profit of $100,000. And so it's a good return on my investment. And I'll go, well, wait a minute. Do you have to work 40 hours a week to get that $100,000? Right? So one of the things I teach people is how to separate what we call the seller's discretionary earnings, which is the total profit, including the owner's salary, from the EBITDA, which is sort of the investment revenue, because the EBITDA has to justify the cash you put down. The seller's discretionary earnings might give you the reason or the motivation to buy the business. If you need to replace an income from a lost job or a job that you don't like, then you're going to want to go someplace where you can buy a business that's going to give you the total cash flow you need to survive. But you need to get a return on the money that you put down and be able to service the debt and get paid a fair market wage for the work that you're going to do. You don't want to end up earning, $40,000 managing a business where an employee who wasn't an owner would be paid $75,000 for that same work.
Yeah.
Right. And so many business owners get into these situations, these buyers, where they essentially overpay for the business and they indenture themselves basically to maybe 7-10 years of work for less than they're worth, paying off a huge debt. And basically that part of their lives, they hand that value to the seller because they didn't make an informed purchase decision.
Wow. You were saying there were a couple of mistakes. So one is not looking at the time, the value not just looking at the numbers, but looking beyond the numbers.
Yeah, you have to break it all down. And so, some other common mistakes that I see people make is when they analyze a business that's for sale, they won't look at a proper rate of return. And oftentimes what will happen in a small business is you'll have dissimilar assets mixed together in the same entity. So, for example, a dry cleaning business that owns the building that it's in, and you look at the financial statements of that corporation or that LLC, and you see a certain rate of return, but the problem is the rate of return in the dry cleaning business is very different than the rate of return you need in the commercial real estate business. So when I work with clients, what we do is we separate the two, and we figure out what would be the fair market rent, for example, that this business would be paying if it was leasing the space from somebody else. And then we can remove the real estate component from the financials, and we can say this building is worth X because it demands a certain, income that a real estate investor would want to have. And maybe the cap rate on this type of property is 10%, right? Mm-hmm. But the cap rate, if we're going to use the same terminology on a dry cleaning business, is much greater because business is very risky. So when these things are commingled, it makes it confusing and difficult to look at. When we separate them out properly, we can actually analyze the different aspects of the business. And then what we find often is that, maybe the real estate is a great piece of real estate, but once you take away the money that sort of belongs to the building, the business all of a sudden doesn't look so great anymore. You see that a lot in small towns.
Oh, yeah.
Or especially where businesses have been handed down from one generation to another. The owners have never had to pay for the true value of the space that the business occupies. And so they don't keep up with pricing, or they don't keep up with efficiencies, because nothing makes you manage your business as closely and carefully as a banker looking for a payment, right? If you've always got to satisfy that banker every month, you're going to make sure that you increase your prices every year, that you are looking for new and better ways to reduce your costs and make things more efficient, and you're going to run a tighter and tighter ship. Without that banker there, it's easy to get lazy, right?
It is.
Yeah.
It's very easy to get lazy and not do the things you need to do to push that business every year.
I see people do this a lot with, it always makes me laugh when I ask someone for their financial statements and they're like, well, I can get them. I'm like, what do you mean you can get them? Well, I got to get I'd have to pull them together for you. I'm like, so you're telling me you're not running this like it's a business. You have no clue whether you're making money or not, except for if there's money in the bank account at the end of the month, right? You kind of flushed looks, but people do that so often.
Well, it's interesting that you bring that up. One of my newest workshops is called Build a Business That People Will Want to Buy. And a huge section of that workshop is about financials and financial reporting, because many small business people, if you know the Michael Gerber book, E-Myth, and his whole technician versus entrepreneur thing. Mm-hmm. So many of these people are the technicians, and they get into a certain business because they understand that trade, right? Or that they have that skill set, and they get somebody to do the books, and they set up their what we call the chart of accounts, which is the list of all the different expense categories or the entries on the balance sheet. And most of the time when they go to a bookkeeper or an accountant, they say, I'm starting a business, I need someone to do the books. The focus is on taxes. And so the bookkeeper will set up a chart of accounts, which will make sure that they accurately calculate the income and the expenses and the profits so they can accurately report and fill out the tax return. What they usually are not thinking about, though, is management data. How can we create a chart of accounts that's actually going to create useful information so that once the bank statement's reconciled every month, we can look at our income statement and actually make management decisions? So I'll give you an idea. If you look at a company where there's direct labor, like construction, usually you have two different labor lines on the P&L. There's direct labor, which is part of the cost of goods sold, and then there's an overhead labor, which would be your administrative staff, okay? And the reason you have those two different labor lines is because the direct labor relates strictly to the construction work that the company does, and every month they can look and see what they spent versus what they earned, and they can look at their gross margin. If they used just one wage line, then they wouldn't be getting an accurate view of their gross margin. And so a lot of these small companies, they have these financials that are not set up right. So they can't sit down and look and make sure every month that they're meeting their gross margin requirements or goals. And it's only when they finally go at the end of the year to the accountant, and the accountant does the year-end statements and maybe does the tax returns, that maybe that person gives them some feedback and says, you know what, I don't think your pricing's right. You don't seem to be making quite enough money to cover your overhead. And, you know, it would have been great if you had looked at this 15 months ago.
Yeah.
Right? Because most people, when they do the calendar year, at the end of the calendar year, then they take a couple months to get everything together for the accountant. You know, you're talking about information that is up to a year and a half old now.
Yeah.
Right.
Well, and that can be exactly why many of them either decide, well, I got to sell this thing, or I'm done, because they're so far behind on getting that data. And so it's still helpful, still relevant, but you know, now they're in a hole that's deep.
Yeah. Well, I ran into another company recently, and what they were doing, they thought they were being smart in saving steps. Normally, when you have a business and you receive a bill in the mail, let's say from the phone company, you take that and you put it into your accounting software, and you don't pay it. You just say, we owe it. And now on your balance sheet, you see a payable. It's a current debt the business has. They have to pay the phone company. And then later, when you go to pay the bill, and at that moment it becomes a payable. It becomes an expense. It goes on the P&L as an expense, but we haven't paid it yet, so it becomes a payable. So you can see on the balance sheet that we have this amount of money that we owe. And when you finally pay the bill, your cash goes down and the payable goes down, and it clears. Okay. So what these guys thought they were doing to save time is whenever the phone bill would come in, they would just put it in as an expense, and they would immediately pay it by creating a check, and then they would set it aside and then wait until they had the money to send the check in. And so what was happening was they had liabilities in the form of payables that weren't on the balance sheet. So when they were looking at their own statements, it appeared as though the company was much stronger than it really was. They had like $30,000 or $40,000 of money owing that they'd already written checks for. They never issued a bad check because they were holding them until the money was in the account. But they had no idea what their financial standing was, because they weren't using the accounting software the way it's designed to be used to give you a snapshot of what's really going on in the business.
Wow. Well, and you know, when we're business owners, we can get really caught up in, I've got to get more revenue, and I have to, you know, we get focused on the revenue side, but we're not really taking care of the infrastructure, which is what you're talking about, you know, how we're running the business. And, you know, and then we wake up one morning going, oh my gosh, what happened?
Yeah. Well, but I think most people don't even know that that's something they need to do. Again, they just haven't been taught.
Yeah. Yeah, you're right. You're right, Stephanie. You know, I had a client in Texas actually that I was working with, and she was having a problem, and she came to me because she had seen some of my YouTube videos, and she wanted help to get a loan. She thought that's what she needed. Cash was always tight. Her business was growing. She thought she needed a loan. And so when I started talking with her about her customer journey and her policies and the payment cycle in her business, what I found is that she was doing work where she was paid ultimately by health insurance companies, and the health insurance companies would take 30 to 45 days to pay her once she submitted all the paperwork to them, right? And however, she was delivering service using staff that she paid every 2 weeks, like most businesses do, right? Mm-hmm. So her business was very profitable, and the reason she was in a cash crunch was not because she wasn't running a good business. It was because every time she took on a new client, her receivables would grow. She actually needed money to invest in receivables because she was, guess what, financing the activity of health insurance companies. Right? Because she's paying her employees today, and the health insurance companies are paying her in 30 to 45 days. Mm-hmm. So every time she brought on a new client, it was a drain on her cash, right?
Yeah.
And as she was running short on money, her initial gut feeling, just like you had mentioned there before, Stephanie, was, oh, I got to sell more,
Yeah.
right? This idea that sales cures all. And there's a famous person who's on the Shark Tank, I think, who talks about how sales cures everything. And every time I hear someone say that, I always say, well, it depends on the payment terms.
Yeah. And that's, when I first started in sales training, I was like, oh yeah, sales. I was the same way. Sales cures everything. And then I started, working with these companies, and perfect example, I'm working with a client right now, and they bill per hour to their clients, and they don't have an issue with their clients not paying on time. So we're trying to figure out, like, okay, why are they always having trouble with cash flow? What is wrong with this? And what they found was that some of their clients were still paying the exact same rate they had been paying when they came on, when the business was getting started. But they had people working those accounts who were, getting paid $2 more per hour than they were bringing in for that account.
Yeah. So
and
the margin wasn't right.
Yeah.
Yeah. Yeah.
But it was like, it's one of those things where they were just like, well, we'll raise them $5. And I was like, they were like, well, then that'll give us a $3 an hour profit. And I was like, no, because that's, as you talked about earlier, that's the direct profit. That's not covering your admin. That's not covering your overhead. Basically, you raise this person only $5 an hour, and you're still losing money on them every single time. Right. And it took a while to wrap their heads around that.
And you talk about a change like that. My ex-wife, I helped her buy a trophy and engraving business. And she used to do a lot of sales awards and trophies and things like this. And the woman she bought it from hadn't changed the rate for engraving in over 10 years. And so the other shops in the market were charging almost double what this shop was charging. And so we knew it was an opportunity because the price had to come up. But then you start to wonder, how many of the existing clients are here because of this difference, right? Do we have bottom feeding clients? They're here because they can save a few pennies. And if we are going to increase our price up to the same level as the other competing stores, we certainly can't double our price in one day, right? Because we're just going to give everyone sticker shock. So then you have to create a plan of how am I going to increase this price, and it usually has to be phased in over, in her business. Luckily, sports is seasonal, right? So over a couple of seasons, people don't quite remember exactly maybe what the price was last year, and she was able to bump it up over the course of time. But yeah, these are the difficult things that many small business people don't look at all the time because they don't have the processes and organization in place, the proper operations manual, so to speak, to make sure that they're looking at all these things all the time.
And again, we can get we're talking black belt selling, and of course we want to help people make sales. But for the small business owner, for any business owner, entrepreneur, there's so much more than just money coming in. When you were talking about them financing that company that financed the health insurance companies, we had something very similar happen. I was so excited. I'd just gotten these sales skills, and I had won this huge contract. It was the biggest contract my company had ever seen. I was thrilled, so thrilled, and I didn't know to ask the question until they told me, well, we pay 60 days out. I go, oh my gosh. And, unfortunately, I have a good relationship with my bank. So I went to them, I took the contract, and I said, here, it's going to get paid. And they gave me a line of credit to cover the difference. But, those are cash flow issues because sales are great. But if your cash flow is suffering, then the sales, it all has to work together. And, creating a business to sell and buying a business, let's talk a little bit. We've been talking about selling. Let's talk about buying. What should somebody be looking for if they're going to buy a business?
Well, I always tell people that when you're going to buy a business, you pay for what you get, but the reason you buy it is for what you're going to do with the business. And most of the time when I was selling a business that a technician had built, and it was being sold to someone who was coming out of some sort of middle management role, either in a bigger company or maybe like the military. Military is a great example because in the military, you have procedures and processes, and things are documented, and people learn how to do things in a certain way. And that's the kind of thing that is valuable in business. I often use the example of the mechanic who starts his own garage and works by himself, and then eventually grows to hire another guy. And then the two of them are working there, and then maybe they hire a third person. But the owner's doing all the advertising, he's meeting people at the counter, he's ordering all the parts, he's doing all this stuff, and everything gets stuck. So he works that business like that for 20 years and then decides he wants to sell. And it's sold to someone who comes out of middle management of a big company, and they come in and they implement policies and procedures and methods of control and maybe computer software. And here's the key thing, is they delegate, instead of delegating tasks, they delegate responsibilities. So instead of saying, you do this, and you do this, they say, you are responsible for this part of the business, or you are responsible for making sure that this inventory is always, up to what we need, right? And then they can start to grow it. So what you get, of course, is a cash flow. And when people used to come into my business brokerage office, I would say, hey, what kind of business do you want? They would never say, I want a flower shop or a machine shop or a beauty salon. They would say, well, I earn $65,000 right now, my job. I need a business that'll earn me about $65,000. So business buyers buy cash flow, right? They're buying a stream of income, and what they're willing to pay for that cash flow is based on the risk they perceive attached to that industry. So when I'm doing one of my business buyer workshops, the two examples I love to use is a restaurant versus a septic pumping company, because you can have a restaurant with $100,000 cash flow and a septic pumping company with $100,000 cash flow, and the septic pumping company will sell for more than double what the restaurant will sell for. And it's because of the risks associated with the restaurant industry, right? And so if you think about the restaurants, there's a lot of competition. People are price sensitive. It's easy for new entrants to come in, right? Whereas with the septic company, you've got big investment in capital goods, those big expensive trucks. You've got environmental regulation. So maybe in a certain county, there's a lot of permits and licenses that someone has to get. And those create what's called a barrier to entry, because they're hurdles for other new people to jump over if they want to come in and compete. And the more insulated an industry is with barriers to entry, the less likely someone's going to come in to compete, and the more easily you can push your prices up, right? And so the septic business, maybe they don't have as big a problem raising prices because people only call them every 2 or 3 years, right? And they can't quite remember what they paid last time. And hey, it's only a bill we pay every second or third year anyway, so does it really matter if it's another $20, right? And so the septic company can be a lot less risky cash flow. And so people are willing to pay more, right? And so that's essentially what it comes down to, is what is the cash flow and what are the risks? And when I evaluate businesses, what I do is I'm able to look up through databases that I have access to past transactions, and I compare people by industry and by size, because the risk changes as the size of the business changes. So the little family restaurant that does $500,000 in sales is far more risky than the franchise restaurant that does $3 million in sales, right? It's a bigger operation. They have far more clients. They're probably in a busier, spot. And, I always give the example, if that local mom and pop corner diner lost 5 of their Friday lunchtime regulars, they might actually notice it in their sales. Whereas if 5 people stopped going to McDonald's, they would never know. Mm-hmm. Right? Because it's a much bigger business. They have far more clients.
Wow. This has been, I have to tell you, David, this has been a very fascinating look at something that probably a lot of people haven't really given a whole lot of thought to. So what I'd like to do is ask you, how do people get in touch with you so that they can learn more about this, especially if we've got business owners who are thinking, one day I'd like to sell my business, or we have people say, I really want to get more information on how to buy a good business.
Well, I mean, I have my blog site is davidcbarnett.com, and from there you can get access to the YouTube channel and my other sites. There's a tab there that says I want to work with David, and on that tab there's actually, I've got a website just for buyers called businessbuyeradvantage.com, and I've got a website just for sellers called howtosellmyownbusiness.com. And those two special sites talk to both of those groups in their own language. This is what we need to do to work on stuff. But getting back to sales, and the whole topic of your show is selling, right?
Yes.
For those business owners that own a business, when they want to sell that business, the biggest thing I can say to people is your cash flow is going to determine what you get for your business. And so you can't let your foot come off the gas pedal, right? Mm-hmm. And what I see happen too often is people will get to a point where everything's going well and they've had increasing sales year after year. The profit's been going up year after year. And they say, you know what, I'm not ready to retire. I'm not ready to sell. I don't want to move on. I'm going to keep doing it. But then they start to get a little bit tired, and maybe the bank's been paid off and they don't have the bills and the debts chasing them like they used to. And they start to slow down, and the sales start to level off, or maybe start to decline a little bit year after year. And they're still making good money. But when they lose that momentum, that's when the value starts to erode in the business. So you want to get out when you've got everything working for you, and things are moving up, and the sales and the earnings are good. And you want to get your systems in order. Because the biggest fears that buyers have are that they won't be able to come in and run the business. And when you have someone come into your business and they say, oh my goodness, I don't know if I'd be able to run this. And you say, well, here's our operations manual, and this is our marketing procedure, and this is how we run our 3 times a year postcard campaign, and this is how we set up the Facebook ads, and this is how we track how many of these ads produce, new customers, and this is how we manage our customers. And like, when you have all that stuff in place, you're able to help these people shed that fear. And they'll be able to see, wow, I can learn this because it's all right here. It's all been documented.
So I know we've got to start wrapping up at some point here, because our listeners, I'm sure our listeners, I'm getting a lot out of this. I'm just listening, and this is something that has come up to me again and again over the past few months, is that, I went to an event in January, and this lady stood up and she said, I don't care who you are, what your business is, if you don't have an exit strategy, you are in trouble. Every business should have an exit strategy. It will force you to think your business as a business. And so it was something that I always sat there and I'm like, well, as the face of the business, you can't sell that business. But the more I thought about it, the more I was like, no, that makes a lot of sense. So really appreciate you coming on and spending time chatting with us about this. Remind me again, I should have been writing it down. I was taking other notes instead. How do people get in touch with you again?
davidcbarnett.com is the easiest place. And, my blog site, there's a place you can sign up to my email list. Every Friday I put out a new email, and I put out a video every week, which either talks about buying, selling, or managing small businesses, or local private investing. So I also help people with attracting private investment into their small business, or making similar private investments. So it's basically along those 4 topic areas. And the YouTube channel now has almost 200 videos. So there's a ton of content up there. And I always know when someone new has found the blog site, because I just see these big spikes in my viewer data. I know that somebody stayed up all night watching videos when they should have been in bed.
Well, one of the things too, we're recording this on video, but it is going to be audio. But one of the things you can go to David's website and get is top level questions to ask yourself daily. I actually downloaded this, And I'm using it as a guide to create a sellable business, because ultimately I want to have a sellable business. I know there's a lot of things on here that I need to address, but that's okay, because part of being a black belt is that you're open to learning, and you're open to getting more information, and you're open to learning new skills. A lot of the things you're teaching, David, I'm planning to go get your books, because I just I find that fascinating, and I think it's important for our listeners to understand this, and that as much as we push sales, there's sales has to be a bigger conversation than just revenue walking in the door. There's so much more that can make it valuable, the business valuable. So thank you so much for your time and for sharing with us. It's been a delight to have you on the show.
Well, you know what? I always love being on shows like this. It was a pleasure talking to you too today. And I can't wait for you to come by. And hey, Anna, once you read one of those books, why don't you get me back on the show? We'll talk about one of my other topics.
Absolutely. That'd be wonderful. Thanks for joining us.
Awesome. Thank you so much for joining us, David. It was great to have you here today.
All right. Have a great day.
Thank you, guys. Hey, guys, out there listening in with us, check it out. Go join us in the Facebook group. We'll post David's sites in the Facebook group at facebook.com/groups/black belt selling. Mom and I are here every single week bringing you guys great content, great speakers, great guests to broaden your horizon. And I hope that's what today has been for you. Right now, I'm encouraging you to go out there, get out there, and make it a great week. I'm Stephanie here for Anna. We are the Black Belt Sellers of Southwest and Central Texas.